back and let's pick up where we left off. So the last thing we did was to add a template to the chart, and as you saw, that was pretty easy to set up. But what I'm going to do now, just for a moment, is to turn off some of these indicators, and then we'll add them back, and I'll explain exactly why along the way. So you right click on indicators, and you will see that there are two available there. One says Easy Trading Signals, Pivot Points, and the other says Market Sessions. So let's take off Easy Trading Signals, Pivot Points for now. I'm going to click on delete, and it won't completely delete it off your system, it will just remove it from the chart. So you don't need to worry about that. So hit delete and click close. So now you'll see there are no more horizontal lines, only vertical ones. And I want you to just quickly look at one or two things about these lines, and then we will get into how you can set this up. Right, so these lines represent the starting sessions of the market. So in this case, you'll see that this is the, actually let me quickly go and switch on the little labels to make it easier for you to see. So let's do that. Color labels is set to true. I'm going to switch it back on again just in case. Alright, so let's see. Okay, so let's take a look. We have the yellow line here, and if you hover over it, you'll see it says New York, and the purple line says London or magenta, and the blue is Tokyo, and the light purple one is Sydney. These are the main markets that we're interested in, and that we need to actually keep track of their starting points. Now I want you to see something very interesting. I want you to start looking at some patterns that repeat throughout the market. These type of things are really important to notice because it starts to give you some structure in your trading. Now, the first time you open up a bar chart like this, a candlestick chart, sorry, you don't have a clue, right? It all looks like just too much information, and you don't know where to start. So I want to give you some starting points to start looking at the market and look at the structure of the market. And one of the first things that I want you to notice is what happens when the market opens. So let's head back and start right here. I'm going to zoom in a little bit, and you can do that with the zoom in icon at the top. So if you do that, you just have a bit of a better view on exactly what happened. Maybe that's too much. Let's do it like that. So let's take a look at this, right? So just before the New York opening, you saw the market moving up. So this is 15 minutes, right? Each bar represents 15 minutes. And as soon as the market opens, New York opens, it starts going down. Over here we have a similar pattern. Just before the London open, the market was moving up a little bit, and directly after that it moved down. Here we have our two smaller openings, Sydney and Tokyo, and we do see some of the similar type of behavior, but not quite as marked as with the bigger markets. So here we can look at it again. We have the market moving down. As soon as it opens, it moves up, at least initially. Here we have quite a big move. The market moved up, and then just before the London move and during the London move opening, it starts moving down, and then it changed direction. Our smaller market openings moved up, down, down, and then up. Here the market was moving down, and then it moved up for a while. The market moved down, and then up, moved down over here and then up. And okay, smaller markets, I'm going to ignore them for now. Market moved down, market moved up, market moved down, and in this case it basically kept on going down. Smaller markets, I'm going to ignore them for now. Market moved up, market went down. Market went down, okay, but shortly thereafter it started going up. Smaller markets here once again down, and very shortly thereafter it reversed, went up, went down, up. So I think you're starting to see a bit of a pattern that we can maybe exploit to our benefit, and that is the whole trick of trading. You want to basically exploit the market to your benefit, and in order to do that you need to start looking at patterns. One other thing that you can do, and that I like doing, is to add an additional indicator. And I developed this, and I'm just going to add it in here. It's not a trade secret or anything like that, so you will get it for free as well with this little instructional video. So what this does is it adds pivot points. These points has got a whole, well, there's some technicalities to exactly how they calculate it. I'm not going to go into that. But what I want you to look at is the structure that it adds to your trading and to your charts. So basically you have three components. You have a center point, which is gray, and you'll see it over here. Center point, center point, center point. Then you have a red and orange. On the other opposite side you have blue lines and green lines. So anything above the gray is, we're talking about, going up, and below that down. And these lines represent areas in the market where we expect the market to at least pause a bit before continuing, or very often actually reversing direction. And you can see that very quickly. For instance, over here, the market goes up, touches, and goes down. Then it touches, and it doesn't quite know what to do, so it kind of tests this level and then continues down. Over there it touches, goes up, touches, and goes down. So you can start seeing over there it touches, over here it touches multiple times, touches over there, hesitates over here. You can start seeing how the market reacts to these lines. Now, the really, really cool thing about these lines is that they are drawn before the market actually responds to them. So these lines weren't drawn in after the fact. These lines weren't drawn in. They're not support and resistance lines that were drawn in after the fact. They were actually drawn beforehand, and they were set at those levels at the beginning of the market. So the moment it opened, you'll start seeing these will tick along, so they'll become bigger as the day continues. And you can see just how often the market responds to these levels. It's incredible, and it really provides you with structure. I mean, look at that. The market opened, it kept on bumping up against this level, went down a bit, and then bumped up against it again, went down, hesitated in this area, went down, touched this level, and then slowly went back up again. And this happens over and over and over again. I mean, look at this. It just constantly hit these levels over here and over there as the day went on. And by combining the market opening times together with the pivot levels, you're really just providing a whole lot of extra structure into your charts in order to trade intelligently. And when you use these tools together, it basically gives you a framework that you can look at the market, and that is where the power lies. So it's a bit of a longer video this time. I hope you enjoyed it. We'll get more into how the technical details about how to set these things up. The indicators, really simple to do, but I wanted to to give you just a bit of a basic introduction into how to structure your charts and set up your trading. Right, see you next time.